Stuart Kaiser is in the crucible of equity trading. It's Citi Global Markets. And I'm going to go a little wonky here, folks, like we did yesterday with Ira Jersey and Ed Al-Husseini on the bond market moment. So you're a fancy guy on Wall Street in a fancy suit at a fancy lunch, and you've had a successful hedge transaction where you're in the equity market and you set up your trades correctly, and then out there somewhere, good morning, Linda Ronstadt, you have to rehedge. How do you rehedge in this environment? I don't get it.
Yeah, I mean, Tom, like, I've never been called fancy before, but this is a first for me. But
oh, come on, you guys are living large at Lexington. I mean, they're down the street on Lexington. They're in between the McDonald's. I mean, it's really luxurious. How do you rehedge as a pro or retail?
Yeah, look, I think at this point, hedging has gotten very, very expensive. It got a little cheaper last night. But I think from our perspective, the market has told you what is going to work as a hedge in this current environment, and you should take that lesson to heart. Even if it costs a little bit extra to protect your portfolio, you should use those lessons, I think, in your hedging strategy. We've been recommending hedging with stocks that are exposed to the U.S. consumer in the ETF space. That would be the XRT. And hedging stuff that's exposed to depositioning from institutional investors. And frankly, that's in the tech space. So I think you're using triple Qs or NASDAQ puts to hedge that. So I think those are the two most simple ways to just say, the market's rallied, but I learned over the last 2 to 4 weeks what is most sensitive to the headlines that are coming in. Let me pay a little extra, but make sure I'm protected against those risks. So that's how we've been focusing on it.
Stuart, nobody sees more buy and sell orders than the equity trading floor at Citigroup. I mean, what did you guys see yesterday? Talk to us about how the trading was yesterday. We had these monster moves in the indexes. What did you guys see on the floor?
Yeah, honestly, it's 2 days this week. Frankly, we've had 500 basis point type moves in less than 15 minutes. It feels like a lot of those sharp moves have frankly been more about shorts covering than they have been about long risk getting added. If you think, if you're short, you're feeling the P&L pain and you're sort of forced, to get out of that. It's hard to make the decision to go from uninvested to long in less than 15 minutes. So I think the initial burst has been short covering, and then after that, we have seen some incremental. People nibbling around the edges on the long side. But, I would say the majority of those two big moves were probably sponsored by shorts.
What are the hedge funds doing?
I think, look, it depends on the hedge funds. Your long short guys, I think, are amongst the group that are picking around the edges for their favorite stocks. The macro guys, Tom, it really depends on where their positions were
which house they're at, whether they're in the Hamptons or they're up in the Adirondacks,
We got a VIX at 36. Tom keeps us focused on the VIX, but we had a VIX there at 50. But even at 36, I mean, this is a kind of a fringy market here. I mean, do you feel a VIX of 36 on your trading desk?
100%. I mean, the VIX at 50, we've only seen that twice really in history, clustered around the financial crisis and COVID. 36 is, that's implying something more than a 2% move per day, every day for the next month. So these are very extreme levels. And Tom, when you ask about the hedge funds, I mean, these guys have to manage a risk portfolio. When you have that level of volatility, it's really hard for you to step in and take risks. So at 36, the VIX is still an issue. Don't get me wrong, but it's not the issue it was when it was at 50, at least.
We welcome all of you nationwide. Good morning in Canada. Good morning, special good morning in Mexico City as well. Out on YouTube, subscribe to Bloomberg Podcast. This new digital technology. Amazing. At a meeting yesterday on Android.
Really?
Google. They have new technology coming out.
Of course they do.
They said, you'll love it in your car. And they said, they don't have a car. They said, well, that's a problem. Anyways, on Android, on Apple CarPlay, good morning to you. Good morning, 99.1 FM in Washington, 92.9 FM in Boston, and our flagship, Bloomberg 1130. Stuart Kaiser listening every day on Bloomberg 1130. Give us a vignette into how equity people, and particularly those not as grizzled as you, looked at the bond market yesterday. They're on a different floor, right?
They are, we're on 3, they're on 5,
They're on 3, you're on 5, and 4 is a no man's land to keep them apart. There's a bar on the floor where they meet at 4 p.m. Give us a vignette of how equity people looked at the bond market yesterday.
What I would tell you is, as an equity person, the fact that I knew the time and size of a 10-year bond auction kind of tells you everything you need to know. So, look, I think people were looking at it with trepidation, trying to understand what a basis trade is and how that can impact markets. But I think more importantly, the view from the equity folks is we have this huge auction. Is there going to be a protest vote from foreign buyers in this?
And there wasn't.
And there was not. So I think, for equity folks, that we kind of simplified it down of have a big auction. What are the one or two things we need to focus on most? And one of the things was, what was the foreign demand in that auction? And it went, I guess, better than feared.
There's a 4-box solution, folks. You're long, you go to cash. You're in cash, you're short. Are people going directly from a long belief to a short belief, or a short belief to a long belief? Or are they stopping on the way in cash?
I think, Tom, they've been forced to stop in the middle a little bit, mostly because of the speed of the move. If you were short, it's hard to go from short to long, as I mentioned, in 15 minutes. Like the speed of the moves has almost been too quick.
Yeah.
And the fact, too, is that it was good news yesterday that the tariffs were delayed. I think that takes some of your worst case outcomes away. But the fact is, you're still staring down the barrel of very large tariffs that need to come in. And I think to get, let's say, above 5,500 in the S&P, we're going to need over the next 2 to 4 weeks to see some real confirmed progress on negotiations with key trading partners.
Stuart, we saw, in the beginning of the first quarter, a real outperformance by international markets versus the S&P 500. Is that a short-term trade, or are your clients telling you that's something longer term?
I think initially, and I'll start with Europe on that side of things, I think initially Europe was viewed as very underpositioned, very low sentiment, and more driven by that. When you got the fiscal announcements out of Germany, that was, I think, a little bit of a potential game changer, that they were sort of structurally changing the way that they were going to run the economy. And I think from that point, it became, this might be more than a trade. This might be something durable that I can own. Obviously, we've now run face first into tariffs after about a 10% outperformance in Europe versus the U.S. So that's been put a little bit to the side. But I do think there's a view, if they are structurally changing some things, that this evolves from a trade into more of an investment.
I got a Duke T-shirt on sale right now.
Yeah.
We've been looking at the imports of Duke
the national
merch,
championship
T-shirt. The Final Four T-shirt is on sale right now.
You had a big win this morning, Tom, because John Farrow was quoting the Dow.
John Farrow quoting.
Yes.
Oh my word!
So there's victory lap for you, sir.
Yeah. Wow. All right, let's have a moment of sit on that one for a while.
Exactly.
I remember someone once said to me, he said, "You can't call it the FTSE." I said, "It's the FTSE." I'm sorry. That's what we call the London index. It's the FTSE, and I can't remember the formal name. But these all have nicknames, folks. That's how we get through. That's how we survive the day to cocktail hour on the 4th floor at Citigroup. Stuart Kaiser, valuable. Thank you so much for joining us